been so much buzz around the Dangote Petroleum Refinery, but have you ever wondered how the other refinery within the conglomerate is doing? Yes, a leading player within the Nigerian sugar industry with 55% market share. We're talking DSR, Dangote Sugar Refinery. It has come under our radar of late with the issuance of its Series 6 and 7 commercial papers. They're capitalizing on the capital markets to raise financing about 50 billion naira, if I'm not mistaken. Of course, subscription closed December 12th, but obviously they're looking to raise money. Of course, as a stock, it has had mixed fortunes over the past 2 years. Last year, 2023, a lot of investors in the stock probably smiled home to the bank. The stock, grew 255% year to date. This year, however, it's been a bit of a different story. It has lost about 38% of its value on the stock exchange, right? And we're seeing it's 149th when it comes to performance on the NGX. So will its fortune change in 2025? And are you in good company? Let's find out. Joining me from one of the top 2 stockbroking firms when it comes to value traded, we have Adebanjo from Cardinal Stone Securities. It's a pleasure to have you in.
It's a pleasure to be here.
All right, let's get into it, right? Whenever I hear any companies heading to the markets, I'm thinking debts, or are they looking to expand? What's going on here?
Right, so in the case of Dangote Sugar Refinery, right, this company has not been doing very well. Its core earnings have been trodden by issues around foreign exchange exposure, and if you look at its cost of sales, it's been materially bloated because of its high import dependency, right? So already what the company is trying to do is to seek financing in the short term in order to plug all its obligations as they fall due, such that at the time where its earnings begin to recover, it would now ease up on these borrowings. But at the moment, it's short-term borrowings to ease to work out working capital needs at this time.
So it's not necessarily expansion moves.
Not really.
All right, and any lender, right, will be thinking, okay, what's their debt like at the moment? We're seeing that the ability to pay short-term debt with short-term assets, we're seeing that reduce. We saw that reduce last year to 0.77%. So what can you tell us about the company's current debt profile and what's going on there?
At the moment, as you rightly said, the company is raising a series of 150 billion naira in the series program for commercial paper. Already, it had raised about 141 prior to this 50 billion that it just did. And in my own engagements with the company, as some of these obligations mature, they now have leeway to get more. And that's what informed the 50 billion that they just raised in December, right? Mm-hmm. So if you look at the entire borrowing structure of the company, you'd see that aside this 150 billion that's borrowing, the company has an 85 billion naira loan from Zenith Bank as well. It's also tapping into, overdraft facilities as well. So, to a very large extent, its debt profile is significantly massive. And so what it's trying to do is also to temper maturity profile, right? So it's seen that, as you know, commercial papers are 1-year instruments for the most part, on average. But it's also looking at a 24-month loan from Zenith, such that it can also extend the maturity of these obligations so that they don't fall due at the same time. But yeah, that's what has affected its current ratio, as you rightly said, and it's a tough time, to be in the management of Dangote Sugar Refinery. But I think they're taking steps, to recover from this challenge.
All right, we'll get into some of those steps right now, but let's also get some of your thoughts on, what's happening with the expansion plans as well, how that is falling into place.
Okay, so at the moment, there hasn't been much traction in terms of contribution to earnings from that front. I know that the company is trying to expand, its capacity. At the moment, it's trying to move from 3,000 tons of cans per day to around 9,000 by the end of the year. It's also looking to do another 12,000 tons of cans per day in Nasarawa State sometime next year, right? So we expect that there'll be some capex spending, in this regard. And already from our engagements with the company is looking to do a 200 billion naira bond program next year, right? And this we think is going to finance most of the capital expenditure plans. So at the moment, not so much is happening. If you look at the most recent financials, about 93% of their cost of sales is still from imported raw materials. So that shows you that so far, not much has been done in terms of local production to ease the pressure on their cost of sales.
We'll look into that and some of the initiatives, they are taking. But right now they have that 150 billion naira commercial papers program, and we've seen a couple of series earlier this year.
Yes.
First of all, for investors, what's in it for them, right? And what's in it for them?
So it depends on the investors you're talking about. Fixed income investors are smiling to the bank because we're in a higher interest rate environment at this time. So it's kind of when you look at the rates that are being offered on these instruments, right? The credit rating for Dangote Sugar is not exactly great at this time. So it means it has to offer higher rates, to incentivize investors to get even into those commercial papers. So fixed income investors are kind of happy, but there's also the risk because, like I said, this company is a loss-generating company, right? So you also have to look at the fundamentals as to how well they'll be able to service these obligations as at the time they fall due. For equity holders, not so much happiness on that front, as you know. The company is unable to pay dividends at this time, and like you rightly mentioned, the company is, in terms of its stock performance, it's not one of the best performance this year. So in terms of capital appreciation, dividend payments, shareholders are not quite happy, to be honest.
They're not quite happy, and hopefully, I don't know whether we'll see an impact of that on the stock going forward, and what could perhaps propel the stock. But coming to its books now, you've said a little bit about it, but we've seen gross profit decrease significantly last year, and obviously there are projections that this year it could get worse. Looking at their books so far, what are you seeing that may be raising alarm bells for you?
Yes, of course. Like you rightly said, as of 9 months, the numbers are not looking any better anyway. And of course, largely due to FX volatility. I think Nigeria has seen the most FX volatility this year. And coming from a company that imports most of its raw materials from Brazil, given the FX dynamics, it's impacting their books significantly. In fact, it's offsetting the decline in sugar prices, global sugar prices, because typically once global commodities begin to show you deceleration in pricing, it should also positively affect your cost of sales. But it's the other way around because the FX impact is so material for Dangote Sugar, right? So that's really the problem, with their financials as well. Then when you even go away from core earnings, because truly, as of 9 months, revenues have grown by over 50%, which is good, but cost of sales have grown by over 80%. So even the core earnings are looking very shaky already. And then when you now go below the core earnings line, you see finance costs are bloating because of these commercial papers and all these loan obligations. Right. And then the bulk of the FX losses that they record is also at that line. So the company is recording negative profits, negative operating cash flows. So it's a tough time.
All right. It can't all be doom and gloom for the company. I'm sure there's some sunshine, that you can perhaps spot out in their books and how they operate and perhaps what is working for them at the moment.
Well, like you rightly said, the company has market share, right? So the market share, I think, is the opportunity that it has, to be able to capitalize on the market. But again, the bulk of its revenues comes from sugar. If you look at the components of all the products here, about over 95% of it comes from sugar. And I like to take a cue from what other similar companies of its size are doing, of its nature, like Boa Foods, for instance. And I think that's what informed the decision earlier last year to consolidate all the food businesses for Dangote. Remember, if you recall, there was a time that the company was looking to merge the NASCON business and the Dangote rice business at the time. So it was such that once those businesses fused together, the revenues from those two other companies would help to shock the shortfall from the sugar. And that's what's happening with Boa Foods. Boa Foods is looking to ease up on its sugar business and focus more on flour and pasta. And right, so once it focuses more capex on those and they contribute to revenue, it would also ease the impact from its sugar line, right? But I think for Dangote Sugar, right, the good part of it, or the positive to look forward to, I think, will largely depend on the backward integration program. How soon that is able to come on stream, would be the deciding factor.
Yeah.
And then also, our expectations for foreign exchange. If we see foreign exchange, volatility in FX ease, given how the CBN has been proactive so far this year in easing the volatility. I think if FX remains more stable going into next year, it might not be as bad as this year.
Yeah, so they're going to have to rely, on policy. But as you've highlighted, and perhaps you've also preferred a bit of the solution, a critical pressure point has been that importation of raw materials. That has weighed heavily on its books. I believe that the cost of raw materials constitutes about 86% of its total cost of sales. So how do you think, the company can dance around this and ease, all of this at the moment?
Unfortunately, there isn't any way around it. The only way really is to reduce volumes, because a lot of those pressures comes from their letters of credit. So if you reduce the volumes you import, you also reduce the extent of letters of credit that you have to service. So I think that really is the only way the company can ease this pressure, but that also has a negative impact on top line because it means lesser volumes, means lesser revenues, right? So in the interim, I think that, borrowings will be the only way, to keep their cash flows positive. And if you look at their 9 months numbers, they had negative operating cash flows, they had negative investing cash flows, but they have positive financing cash flows because all of that money comes from the borrowings that they've been doing over the course of the year. So really, I think that that's going to persist for a while until, FX stabilizes and then we get to see positives from the backward integration program.
Yes, the backward integration program. Right now, they're described as a port-dependent refinery because of how reliant they are on imports. You've highlighted a bit of, how much of an impact this is expected to, have. But, what do you think about it? How much of an impact, again, do you think this is expected to have? And do you see us having the infrastructure to carry such an ambitious program?
Well, I think a lot of it will have to do with the support they get from the government, really. It's not so much that they can do by themselves. I mean, of course, they've been borrowing money, to also finance the necessary capex that this will require, right? But I think a lot of support has to come from the government, to ease the pressure, to also fast track how soon, the infrastructure necessary to make this happen, comes on stream. So really, in terms of impact, I think it's going to be positive, net positive, but it's about the timeline. I don't see this impacting their books next year. And this is just me, right? I think it's more of a 2026 kind of play because really they need to develop capacity to a point where they have to now replace their imports with these exports. So how soon this local production comes on stream, will determine how soon they can lay off the importation. So that's my
and they're leveraging the capital markets right now to shock in the immediate. All right, we'll see what happens with the backward integration program. It's expected to produce 1.08 million tons of refined sugar annually in 6 years and ultimately reach 1.5 million tons from sugarcane plantation, covering more than 1,500 hectares across Nigeria. We'll see. You said 2026 before we see the impacts. Let's come down to the stock, right? It started off the year pretty not bad, right? It was a good opening, 57 naira. End of January, it was about 67. May, there was also some sort of rally in between. It's reached a 52-week high of 89 naira, a low of 28 naira, 55 kobo. Right now, it's closer to that low. What have been some of the pullbacks with these stocks? I mean, I know you're going to say the books, obviously, but tell us a bit more about the pullback.
So I think that a lot of the sentiment that we saw for the most part of last year was because of the potential merger that was going to happen.
Right.
In fact, I think at the most recent conference call that the company had, or I think the AGM, Dangote actually mentioned that, given that the merger was on hold, that the company will still be making efforts to apply again for the merger. So I think at that time, that kind of gives some form of positive sentiment that, that they will probably apply again. So I think, and that was what drove the sentiment early in the year. But I think that hasn't come through anyway. And so I think fundamentals are now back in play and people are like, why am I still in this stock? What's going on with the financials? So when you look at the financials, you see that it's not doing so well. Every quarter, it's a worse performance. So I think that's what is weighing on sentiment for the most part. But I think as soon as the company is able to do this merger, if they're able to fix all the issues that didn't allow the merger go through the first time, I think it will also go a long way in easing the pressure from the sugar business. I
mean, we'll see what happens. But just to zoom out a bit, we know that the sector as a whole, FMCGs, industrials, they have been under, the heat, right, this year. Tell us a bit more about that and perhaps whether or not you see that easing as we head into 2025.
So yes, I think for us, looking at the sector as a whole, it's a function of losers and winners. We have a list of winners going into 2025.
Which
and we think that some will be losers. I'll get into it.
Okay.
So for the winners, really, we look at the likes of Unilever. We like the likes of UACN. We also think that there's a bit of positives for NB, given that NB recently raised the right issue to sort out most of its FX obligations. So we think that for NB going into next year, once it reads its books of all these FX obligations and it doesn't record as much FX losses as this year, they'll be back into profitability. So we have expectation that NB will report profit in 2025. Same for Unilever. Unilever has been a great company, low FX exposure, doing very well in terms of product offerings. UACN as well. I mean, UACN is kind of a conglomerate when you think about it. It has other subsidiaries that tend to prop up its earnings, so that it kind of shocks the shortfall from the food business. But across all its other products, I think the paint business has been doing very, very well, remarkably, in fact. So that's helping to offset the problems from its QSR. That's the QSR business. But I think that those two and NB, Mickey 3, are some of the winners that we think will be going into next year. But for others, the likes of Guinness, the likes of Dangote Sugar, we're not very, very optimistic about them. I mean, it's not impossible that their fortunes change in 2025, but from where we stand, given the extent of information that we have at this time, I think, a lot will happen, for them to recover. For Guinness, we're happy about the new, management, Tolaram.
Suspicions about a delisting with Guinness.
Right? I mean, there isn't so much that has been said there so far, but what we do know is whenever a majority holder takes a majority share of a company, you have to make something called a mandatory tender offer to the existing minority shareholders, and that's where they make that decision whether to delist or not, like what we saw in Flour Mills. Like Flour Mills is probably going to have to delist eventually, right? So if that kind of thing happens with Guinness, I mean, it's not impossible, but that hasn't happened yet. Tolaram is still a majority shareholder there. So once Tolaram makes a mandatory tender offer to minority shareholders, then we'll know if Guinness will still be on our price list going into next year or not.
I mean, you've highlighted a number of winners within the sector.
Yes.
What do you think is perhaps one lesson others that you don't consider winners, or one hack, right, that they have somehow keyed, right, that's working for them and that is bringing them out of this whole FX debacle?
So I think the biggest thing really for them is that they've been long dollars for the longest time.
They've been
long dollars. So they've had more dollar assets
as
opposed to liabilities. So that's what has been the major shift, because throughout last year and most part of this year, when you look at their books in terms of their exposure, these companies are the only ones who have shown positive exposure to FX. And I mean USAN and Unilever. And that's why we think that they will continue to be winners, even going into next year. So I think it's a macro problem, unfortunately. It happened at a time where most of these companies had this kind of leverage, and then FX was very, very volatile at this time. So I think that the extent of losses that we might see next year might not be as significant this year, as long as the currency remains stable going into 2025.
All right, we'll see about that. Finally, yes, DSR, Dangote Sugar Refinery. It's, can I say, big brother? I mean, when it comes to petroleum, right? Dangote Petroleum Refinery is expected to be listed Q1 next year. Do you see that rubbing off? It's the same conglomerate. Do you see that rubbing off on other subsidiaries of the Dangote industry?
So of course, I would like to think that if one of your businesses are struggling, you would want to help out. So I think the success of the Dangote Refinery should rub off on all the other businesses, but not in the way you would think. I mean, the way you probably look at it is, maybe they should get cheaper energy from the sister company, maybe in terms of AG, but not really, because what Dangote Sugar is trying to do internally is, they've recently installed 2 turbines and are looking at, boiler plates to ease their own energy costs to generate electricity with, the byproducts of sugar.
Right.
So not really much reliance on whatever products come from, Dangote Refinery, so to speak. But, and of course, like I already said, energy is not a very major problem that they have. It's just FX and the importation part, right? So I think that what's going to happen is, if Dangote Refinery earns so much FX, from its exports of refined products, internal supply, makes so much money, it's not impossible that we might see a bit of intercompany arrangements just to ease the borrowing costs that Dangote Sugar is going through.
Well, we'll see how it goes. Of course, we know that Dangote Industries and Dangote himself, they have the majority shares with DSR. So we'll see how. It's been a pleasure having you on the show.
Always is, Joanna.
To tie things together, anything you have to say about the stock overall?
Well, I think that for Dangote Sugar, really, I think investors just have to be patient. I think that eventually the company is also looking forward to, finalizing that merger, because it's a major part of how the business would ultimately survive. I mean, you can't be sustainable only making one product, which is just sugar, and that's what has happened. Your sustainability is a function of your earnings, diversification, right? So how well the company is able to diversify its earnings would also help it. So I think from the foods, that's the rice and NASCON coming together to ease that pressure from the sugar business, coupled with the success of the backward integration program, which I hope should begin to reflect from next year, although my views are more 2026. But if it does happen in 2025, then great. I think the company should recover very, very strongly.
All right. Thank you very much. Adebayo Adebanjo, Senior Analyst with Cardinal Stone Securities. This has been In Good Company. Be sure to like, subscribe, and share this, and of course, make that money.